Welcome back to Corporate Radar. Well, for now, the market is holding up with 290 points in the green on the Nifty. So let's get you a special segment, Quarter Se Quarter Tak. Today, we talk about the insurance segment. Surbhi is here to tell us what we can expect from the insurance sector this quarter. Surbhi.
Life insurance players are likely to see moderate growth this quarter as the base Q2FY22 turns normal. Remember, Q1 of FY22 was affected by the Delta wave. The growth slowdown did not come as a big surprise as the industry witnessed weak demand in the retail protection segment. Demand for saving products was also impacted because of the volatility in the capital markets. Apart from LIC, other listed life insurance companies reported an APE growth of anywhere between -8% to +3% in the second quarter. LIC grew by close to 35%, driven by better growth in the group segment. Analyst estimates suggest that the growth in value of new business, that is VNB, will range anywhere between -10% to +10%. This is excluding LIC. The negative impact of the lower retail protection in the product mix will be offset by higher non-par savings product and stronger credit offtake. Additionally, the reducing share of low-margin unit-linked products will likely lead to a 50 to 350 basis points year-on-year expansion in VNB margins. Almost all of the VNB growth is likely to be driven by margin expansion. Our poll suggests that SBI Life and iPro Life's margin improvement will stand out on a year-on-year basis due to their strong growth in non-par saving products. The embedded value for the first half of the fiscal is expected this quarter. MK expects that the embedded value growth will be slightly weaker due to the material negative economic variance. In spite of the benign operational performance and impressive operating profits, the negative impact of the spike in bond yields will result in a slightly weaker embedded value growth. However, they expect this economic volatility will offset over time. With subdued Q2 growth, all eyes will be on the management commentary for growth in the second half. Finally, we leave you with the valuations of life insurance companies on price by embedded value basis. LIC here is at 0.7 times, highly undervalued.
Okay, thanks a lot, Surbhi, for that. In fact, let's get Nischint Chawathe, the senior analyst at Kotak Institutional Equities now. He's joining in. Nischint, good morning. I was going through your report where you do speak about how the APE growth has been very subdued for the sector overall. And within that, individual players like HDFC Life, Max Life, hardly any growth over there. In fact, a degrowth for some of them like Max. Just take us through when you expect a recovery to come through and what is the commentary that you're looking out for from the management?
Sure. See, what we need to keep in mind was that first quarter of last year was hit because of the second COVID wave, and there was some bounce back of business in the second quarter, and which is probably the reason why you are able to see some weakness in the overall APE numbers. Secondly, the high volume the high volume ULIP business was weaker this year because of a more subdued equity market, and that also affects APE growth to quite a large extent. One would say that you would expect better numbers in the fourth quarter, somewhere going closer to the fourth quarter. But my sense is that the overall focus will be on VNB growth rather than kind of just looking at APE growth. Again, the discussion is obviously more on the top four listed players. But if I look at the overall industry, there have been some of the smaller players, or I would say that beyond the top four players, who have been growing at a faster pace. So you have got Bajaj, who's grown faster. You've got Tata AI, who's grown faster, and some of the other smaller players as well. And I think from an overall industry point of view, maybe that is also one trend which is playing out. But yes, overall industry growth numbers have been weak. Probably expect the base effect and momentum to pick up somewhere going closer towards the fourth quarter.
Nischint, hi, good morning. There are big pockets of not mispricing, correctly priced, but valuation differences, right? There is LIC in one hand. In the private side, Max Financial trades at a much cheaper valuation as compared to the others. Which are best placed from here? Which are your best bets given growth prospects for the industry and for these companies?
Sure. So HDFC Life and SBI, in our view, are best placed at this point of time. HDFC Life has consistently been, the bellwether of the industry, launching new products, and gaining market share ahead of time. in the last 1 year, they have been almost kind of flattish as far as market share is concerned, and probably that's what has got reflected in the stock performance as well. SBI Life is doing extremely well, clearly supported by the parent, and obviously their execution playing out quite well at this point of time as well. So our view is amongst the 4 listed players, I think these 2 players are best placed at this point of time.
Okay, SBI Life and HDFC Life best placed. Do you track general insurance as well, ICICI Lombard, Nischint?
Yes.
What should we expect there? I mean, the underperformance continues. There was a brief period of hope around the last quarter numbers, and the stock did well, I think, right out of it, but then just went south after that. What's your view there, ICICI Lombard?
See, here again, I think what is affecting the stock more is the disruption in the industry. We have seen some of the smaller players, being very aggressive on pricing. I believe that in the last quarter, the overall industry combined ratio was well above 100%. And that is probably what is, affecting growth for some of the larger players, or somebody like a Lombard would probably want to wait on the side, kind of then pushing growth, very aggressively. So on the pure motor segment, I mean, while ICICI Lombard's numbers picked up on a YY basis, on a pure motor business, which is sort of the holy grail of the general insurance sector, their growth was fairly subdued in the first 2 months. And I think we'll have to wait out a little bit in terms of, how pricing improves on the motor side. I think that's going to be a little more crucial for the business.
Okay, so overall the insurance industry has seen what, a 10-11% compounded growth rate, right, over the last few years. Is there any change in the estimates going forward? What do you think the average growth could be? And which are the companies that could be the biggest beneficiary of this growth?
See, I think if I have to look at from a slightly longer term perspective and, keep the COVID disruption aside, you're looking at anywhere in the range of around 15 to 16% kind of a growth. Probably need to look at a slightly longer term time frame, because there was a lot of disruption during COVID. Motor sales were weak on the non-life side. On the life side, you could not push quite a few products and so on. Our sense is that this is something which will, this kind of a trend is something which should continue. Probably you will have share of higher margin products, maybe ULIPs growing at a slower pace and the other products probably growing at a faster pace, which would mean that VNB acceleration could be better. Within the space, we prefer life as a more long-term play on insurance over the non-life space, simply because of the fact that non-life space is more vulnerable to disruption.
Okay. Nischint, pleasure speaking to you. Thanks a lot for joining in. So that's a quick update on what to expect